Hey everyone, hopefully you're having a good day. My name's Andy, my channel's Finding Value, and I was scrolling through the comment section, wanted to make a comment here about one of the comments. Looks like it's got a lot of good positive feedback. It says, I know you had a video where you pointed out how using ratios in the past, one could invest $10,000 and go to a few million in about 20 years. You could also do a video now when you invested, let's say, $10,000 in platinum and update it every year or two, and also when you swap platinum to something else. That way we could all be part of that physical platinum investing today and in the future. This could be a new section in your playlist, ratio investing in physical precious metals, and a sample portfolio of you investing in platinum today and later swapping it. It would be nice to see how things play out 5, 10, 15 years, and so forth. And I can show you, I'll go into when I bought my platinum, what I did, why I did it, and creating that actual thing in terms of like a hypothetical portfolio or just a log of when I bought things. I mean, I already kind of have that, and I'll go over what I did and why I did it. So this is, I just threw this together. This is almost a quick little thing that you can see, and I can maybe zoom in. I'll zoom in here and go on each one. So this is the platinum price in the upper left here. I've got the circle, and then I've got the square, and that's where I was buying. And here, I can pop in here real quick too. So in this upper left here, I had purchased in 2019 because the ratios, and I'll go into the ratios right now. So the ratio right here, this is the platinum to gold ratio. And this thing's been declining, over the years. And I think I think this is a bottom here. And I think we're going to go on up. We broke the downtrend of this big boy there, and we've got another secondary downtrend here that we're trying to break through. So we broke out. We're kind of back testing, retesting. I think we're going to break higher at some point. I swapped my gold for platinum in 2020 when it bounced and started coming back up. A little bit above 0.4 was the ratio. 0.4 is an anomaly in history. Platinum's never been this cheap in relationship to gold since we started freely trading in the 1970s, early 1970s. And I think we are at historic lows, and why platinum is such a good deal. And notice that the ratio was anything under 0.7 is, I think, a screaming deal. That's my opinion. I mean, just absolute screaming buy. The platinum to palladium ratio down here in the lower left, it's been declining. We broke this downtrend. I swapped my palladium for platinum in 2020 in April as it started coming back up. I said, this has got to be the bottom. We are under the cost curves for platinum. It's not going to get any cheaper. I didn't think the ratio was going to compress anymore. And I took that bet and said, you know what? I'm gonna swap my palladium for platinum. And I swapped all of it. I only swapped a partial amount of my gold, but I swapped all my palladium for platinum because platinum is the substitute for palladium. And I thought that the ratio down here, which is an incredible anomaly in history. I mean, if you look back in 2008, 2009, and you go across, you're at 1 ounce of platinum buying 5 ounces or maybe even 6 ounces of palladium. That is incredible to go from 5 or 6 ounces all the way down to 0.39 is where we are today. This is an incredible deal for platinum. Absolutely incredible in relationship to palladium, and platinum is the substitute for palladium. But it takes years for this stuff to be substituted out. It's not fast. And that's where your knowledge of ratios and your knowledge of being an investor and your patience is going to pay off here. The market conditions also, when these market conditions come in terms of an expansion phase of real estate and inflation and higher interest rates, favors platinum over palladium, and that's what it says in the past. So that's why I'm so bullish on platinum at the moment. And we broke this downtrend as well. So everything's looking decent, and all we have to do is break this ratio right here, and we're in a new uptrend. That high right there. And platinum silver, looking back, in 2008, platinum could buy 127 ounces of silver or so, almost 130 ounces of silver. We've got the downtrend line, and right now we're right at around 40. If you do the actual purchasing, it's a little bit less than 40. It's about 38, 39 ounces of silver can buy 1 ounce of platinum. That's it. And I think I'm proposing that this is at a big double bottom in here. And I think platinum's going to outperform and move higher in this mid-cycle that's coming up of a commodity cycle. So going back here, because of the ratios and all those charts, I started buying platinum in 2019 in this circle. I was cost averaging in. I was buying like 2-3 ounces every time I bought it. 2-3 ounces, 2-3 ounces, 2-3 ounces. So if I had $10,000, I would probably buy it in 2-ounce increments and cost average in over time. Now, I was caught in COVID. COVID sold everything off. The cost curve of platinum is about the mid-cost producers. These are the mid-cost. Is about 800, like 840, something like that, 8 something. And we went all the way down to $630, or somewhere around there, the low 600s. I bought the living crap. I bought the living crap out of it. I bought so much. I bought it. I swapped my metals for it. I swapped some gold. I swapped some palladium. Being under the cost curve is the lowest risk it's the lowest risk spot to buy anything of a physical metal. There's no bankruptcy problems with when buying a physical metal. There's problems when buying a company because they could go bankrupt unless you're buying one of these majors who is a diversified mining company. That would be maybe worthwhile doing. But if you're playing the physical game, that's the lowest risk way to buy. And in this squares where I really piled in. I just buy all the way up. And I haven't bought as much recently. I mean, because it's kind of came up, and when I saw it coming back down, we're going to do some sort of retest at some point, and that's what we're doing right now. And now I'm starting to look to maybe buy again more platinum. But that's how I viewed this, and the difference I think between you guys and myself, if you were to look at kind of the differences between us as investors, you guys are looking at your account or you're looking at your losses and you're saying I'm down 16%. I should sell. And what I do is I look at the value and I go, like, I look at the cost curves, I look at the value, I look at the ratios and all that, and I say this thing's cheap. This is a once in a lifetime buying opportunity. So I just continue to cost average in. I might be cost averaging in. I've been doing it for 2.5 years, 3 years right now. I've been in this position for 2.5 years. I held palladium all the way since the mid 2000s till 2020. That was a 15-year hold for palladium. And I just recently swapped, and my gold was somewhere in that range too. I bought some gold. So these things don't manifest themselves very quickly. But what I did is I'm looking at the value. Platinum is incredibly cheap. We are in a declining production environment. 2006 was its peak, and it's been declining ever since. To me, this looks like a huge opportunity. It's a very large opportunity. And I went as aggressive as I could when I should have. I played this about as perfectly as I could, and I've been investing for 18 years, and you need to learn from your mistakes when you're younger, and then you need to solidify what's right and what's wrong in your brain as an investor. And then when you see opportunities, you jump and you take them. You take the opportunities when they're there. You don't sit on your hands and say, "Oh, wait for the opportunity to pass by," because these things are going to pass by. They're not. This isn't going to be like this forever. And you're going to have to take advantage when it's cheap, and that's how you make money. You make money by buying cheap and buying it when nobody else wants it and buying it when it's way down and everyone's afraid. So you have to have confidence in whatever strategy that you have. If you don't have that confidence, you are not going to win as nearly as much money, I should say. You might still be able to win, but you won't make as much. So I'm in there, I'm buying stuff when everyone is the most fearful. And it's not too hard if you follow the strategy of ratios, because it'll tell you where the value is. Then you just have to wait for market conditions to change and you buy into strength. So you might not buy when it's diving down, but when you see it start to turn back up, then you just start piling in. Pile in and pile in and pile in and be patient. If you're below the cost curves, I mean, it's a for sure win. I don't know how you can lose unless the cost curves somehow go down substantially. And I don't know how that's going to happen. We have declining production. We've got declining ore grades. We have energy that's becoming more scarce, and we're going to go into an inflationary environment, which is going to push the cost curves higher, not lower. So I think that we are at the beginning of an inflationary environment. It's going to be a secular change, which means it's going to happen for many years, 10, 20, 30 years, something like that. Maybe 10 years, I don't know, however long it is. And you're going to see a big rise in this stuff. You're going to see a shift in precious metals being revalued against the currency, monetary base. So that's kind of where my viewpoint is, my paradigm, and how I'm viewing these things. And I think the opportunity here is platinum. That's the one at the moment, and that's the one that I'm piling into. And you guys can do whatever you want. This isn't supposed to be financial advice. It's not. It's just my financial opinion. It's education, and you guys can do what you want if it fits within your strategy. I view the physical precious metals as the least risk way to play anything in this world. There are three things in life that preserve wealth: precious metals, art, and real estate. Everything else goes to zero. Currencies, bonds, businesses all go to zero. There's no business that's been open for 10,000 years. I mean, everything else is basically all gone to zero. Cryptocurrencies, I'm sure, will all go to zero. So these three things, and then you have inherent value because of the utility of metals and other things to society. And when we see a shortage in energy, if we do, and I'm not claiming that we will, but peak oil does exist, and it is not just a theory. It will happen, no matter of what, for whatever reason. But I don't see how you can have oil peak and then have us go to some a very intense mineral-based society, and not have your minerals run out. You're going to run out at some point, and then how do you get them back? How do you get them back from another planet? That's going to be a very big challenge, because weight is everything in aerospace. I'm in the aerospace business, so that's going to be a challenge. That's going to be a big challenge. So that's why I'm loading into physical precious metals. It's getting your money out of the system. They don't know how to tax it. Then, if you run into energy constraints, you have the metal that everybody wants. It's in your hands. If the metal's in the ground, then you have to have a bunch of energy to get it out. If you have to have a bunch of energy to get it out, the cost should just go ramping higher if energy becomes scarce. So really, what's going to happen is money is a future repayment. Dollars are a future repayment. It's a promise to pay something in the future. If energy becomes scarce, your dollar is literally backed by energy. So you're either going to pay it back by a natural resource or a product, and that requires energy. If energy becomes scarce or becomes more scarce, which then becomes more expensive, your future repayments become more expensive, which means that they're not going to get the growth that they think that they want to repay the debt. If you don't get the growth to repay the debt, your debt goes bust. And the only thing of value to preserve value are those three things again: real estate, art, and precious metals. And in history, what people run to is precious metals. So ultimately, any sort of currency or monetary problem will manifest in higher precious metals prices, most likely, and they'll be revalued against assets in the world. Precious metals would be. And then if any energy crisis were to happen, whether it be peak oil or whatever, and I don't know when this stuff's going to happen. I'm not projecting, I'm not saying that it's for surely going to happen and when the timeframes are. But what I am saying is I'm prepared for it if it does happen, to protect at least some of my wealth. And hopefully that works. We'll see what happens. If you guys like this content, give me a thumbs up. Subscribe to the channel if you haven't subscribed. And thanks for listening. This is Finding Value.